Hi, I'm Alex Deploy, and a warm welcome to the Magic Multiple Moving Average course. Quite a mouthful. I'm very happy that you've enrolled for this course, and I hope you learn something from this course that you will remember for the rest of your life. Let's quickly review what we're going to be doing on the course, and that really comes from the course objectives. I'm going to be teaching you the benefits of using the multiple moving averages in your Forex trading. So I'm going to teach you how to create the indicator from scratch. You're going to learn the common sense trading and analytical rules, the setups, and the signals created by this technique. You will also learn how you can quickly access trading opportunities for a single currency, and also learn how to evaluate a number of currencies at the same time to get the best overall market perspective of which currencies are phases each currency finds itself in, and which are the best trading opportunities. I'll also show you how to evaluate the trading signals using a number of time frames. And then lastly, we'll look at how you can incorporate this method into your own trading system if you like. Please ask as many questions and make as many comments as you like using the facilities provided. Your questions are very important to make the course grow and become a richer course for future students. Also, please remember to review and rate the course when you have completed it. This will help future students evaluate the benefits of this course. So let's get straight into it and move on to the next lecture. In this introduction lecture, we're going to have a look at the various ways that you can use the Magic Multiple Moving Average technique. Now on your screen you can see one of the ways, and that is comparing a number of currencies to each other to very quickly see the state of the Forex market, which currencies are trending, which ones are consolidating, and so on. There are also specific trading signals that get given by the Magic Multiple Moving Average technique, and those are also obvious in this particular overview, but we'll cover those signals in future lectures. So the first use is to get a very quick overview of the market phases and also to spot trading opportunities at a very high level. Now the set of charts that you see on your screen at the moment are 1 hour charts. You can also very quickly convert them to 4-hour charts and see another perspective of the market at a 4-hour time frame level. After you have identified a particular currency that you are interested in trading, you can then drill down to that particular currency's Magic Multiple Moving Average charts, and I'll show you an example of that. Here you have the daily view, the 4-hour view, the 1-hour view, and the 15-minute view of the Euro USD, all giving trading signals and trading phase information. But don't worry, we will cover the setup of the indicator as well as the setup of these charts that I'm showing you right now in the course in quite a lot of detail. I'll be setting them up from scratch so that you will be able to do them yourself. The other use that you can put the Magic Multiple Moving Average technique to is to use it in conjunction with other techniques. Here is an example of the Multiple Moving Average technique being used in conjunction with the RSI trendline violation technique. And once you know the signals, you'll see that the Multiple Moving Average technique sometimes gives signals that are a lot faster than the other techs. At worst, they confirm the other techniques quite nicely. So there's quite a lot to go through in this course, so let's move to the next lecture. In this lesson, we're going to look at using multiple moving averages to determine market phases. This is where the multiple moving averages are so good, in that it makes it so easy for you to see the market phases. On the screen, we have a number of market phases marked out, and I'll go through them one by one. Messy phases are when the price just ranges sideways in a random way. The worst type of market to try and trade, but again the multiple moving averages show you the sideways market. We then get knotting, where the prices knot, and you can see there's a couple of times that it's happened here where they knot and they almost become one color. Those are warnings that there could be a very volatile breakout, and in fact here at the last knot, quite a nice volatile breakout occurred. So we're always looking for knots when trading the multiple moving average systems, because we know that there's a good chance of a volatile breakout from those knots. And when that happens, the market goes into a trending phase. We call this the waterfall, although it's actually the water's going in the wrong direction in this particular case. After trend, the market will either reverse or consolidate. And in this case, we have a consolidating market, and it does give specific signals that it is consolidating. After consolidation, the market can either reverse or continue. In this particular case, we're getting a very clear multiple moving average signal that there is a trend continuation. These specific signals will be covered in future lectures. Then here's another example of a trend continuation signal. Very often a trend can also reverse quite sharply, and here we see an example of the multiple moving averages giving us a strong reversal signal. And most importantly, we want to know when the trend ends, and here we have a clear end of trend signal. These will become clearer as we work our way through the course, but the advantage of knowing these phases and seeing them very quickly is amazing when you're using 12 or 16 currencies to trade. Within 30 seconds, you can see the phase of each currency and determine its tradability. One of the big advantages of using the Magic Multiple Moving Average system. In the next lecture, we'll be covering the specific trading signals. In this lecture, I'm going to cover specific signals and guidance given by the Magic Multi-Moving Average trading system. The first and probably the most obvious trading signal is the extreme consolidation. That is when all the moving averages start condensing into one little area and the colors almost mesh together. It doesn't have to mesh together, but as long as there's an extreme consolidation, it is a sign that there will be a nice volatile breakout coming out of that consolidation. We call that consolidation a knot, and there are various ways of trading that knot. You can either straddle the knot, so in other words, put a buy above it and a sell below it, and ride the trend that develops from that particular knot. Some traders think they are clever enough to spot the potential breakout of that knot, and they would then only place a one-sided pending order very close to their knot to catch any particular breakout. So that covers the knot. Then after the knot comes the waterfall. That is the phase where all the moving averages point in a particular direction and signify a very, very strong trend. This does not need to happen straight after a knot. It can happen after crossover activities, but when all the moving averages are pointing in the same direction, it is giving an almost obvious message that the market is trending very strongly, and you would be quite silly to try and trade against that trend. So the waterfall is our next signal or guidance formation. Then the next area is the consolidation, which often happens after the waterfall has lost its strength and the market then consolidates at the new levels. A signal of consolidation is when the fast moving average just flattens out as it goes into the other moving averages. Then you can expect a consolidation to occur. We also do have the reversal signal. That is when there's a beautiful waterfall type of formation that happens, and then the fast moving averages has a very sharp reversal and cuts into the other moving averages at a very sharp angle. And that, when that happens, the chances of a reversal are lots stronger. So watch out for the reversal signal. Then there is the exit. One of the nice things about this particular trading technique is that it does provide exit signals. So when you are in a waterfall and you are trading in the direction of the trend and you're in a transaction, your exit will occur when the fast moving average crosses over the next moving average. On a balance of probabilities, that is the most optimum exit you can make out of a waterfall formation. We then have the continuation trade. Now the continuation trade is when the fast moving average cuts back and cuts over the next moving average, but then spends a very short time and then continues pointing in the direction of the overall trend. That is a strong continuation signal, and obviously you would then trade in the direction of the trend. Often students ask, when there is a knot, how do I know what the likely direction of the breakout will be? Now the best guidance I can give in this area is in this example that we're looking at right now. Always look where the fast moving average has come from and is going to. If it's cutting into the knot from the bottom, it is likely that it's going to shoot out the top, and therefore the likely outcome of that consolidation will be a buy. As you may know, the market also goes through messy phases where nothing much is happening, and it is best to stay out of the market. The magic moving average will give you hints of this, where the moving averages are in general quite flat and there are just zigzag movements over the flat movement. It would be better to stay away from those type of movements. In future lectures, we'll be looking at how you can view the whole market using the magic multiple moving average approach. And by doing this, you can be selective and choose the best setups that the market presents, and also stay away from the messy setups. These signals might become clearer as we go through more trading examples.